Hi friends, நான் CA Mahesh KS பேசுகிறேன். In this video, we will quickly revise Section 7 Scope of Supply, Section 8 Tax Liability on Composite and Mixed Supply. Both are Category A sections, very important from examination point of view. There are total 19 key provisions in this section. Out of these 19 key provisions, 1 or 2 key provisions are tested at each attempt by the institute. Weightage is 2 to 4 mark. Section 7 says that there are 3 conditions are there in Section 7. If all the 3 conditions are cumulatively satisfied, it is a supply, it is a taxable event and GST will be attracted. Out of 3 conditions, even one condition is not satisfied, it is not a supply, it is not a taxable event and GST will not be attracted. What are the 3 conditions? Number 1, there should be supply of goods or services. Number 2, the supply should be for consideration. Number 3, the supply should be in the course or furtherance of business. If all the 3 conditions are satisfied, it is a supply, it is a taxable event and GST will be attracted. Out of these 3 conditions, even one condition is not satisfied, it is not a supply, it is not a taxable event and GST will not be attracted. Supply includes disposal, exchange, barter, transfer, sale, rental, lease and license. Now, one more item is included in it. That is, activities or transactions by a person other than an individual to its members or constituents or vice versa for cash, deferred payment or other valuable consideration is also treated as a supply. It's a taxable event and GST will be attracted. இது நான் ஒரு சிம்பிள் லாங்குவேஜ்ல சொல்லணும் அப்படின்னா, ஒரு அபார்ட்மெண்ட் இருக்கு, அந்த அபார்ட்மெண்ட்ல ஒரு 50 ரெசிடென்ட்ஸ் இருக்காங்க and they have one resident welfare association. This resident welfare association every month collect electricity charges from the residents and pay to the government. For doing this service, that association collects rupees 50 as service charges from each resident. This provision says that these service charges is a supply, is a taxable event and GST will be attracted on it. Condition number 1 is there should be supply of goods or services. Money and securities are neither goods nor supply. Any supply of money and securities, even for consideration, even in the course or furtherance of business, is not a supply, is not a taxable event, GST will not be attracted. But any service charges collected for use of money or transaction related to money is a supply, is a taxable event and GST will be attracted. For example, service charges collected for issue of demand draft, service charges collected for issue of letter of credit is a supply, taxable event and GST will be attracted only on that service charge portion. Here the condition number 2 is the supply should be for consideration. Supply without consideration is not a supply, is not a taxable event and GST will not be attracted. But there are 4 circumstances in which even though there is no consideration, even though it is without consideration, it will be treated as deemed supply and it is a taxable event and GST will be attracted. What are that 4 circumstances? Trip. T. Transfer or disposal of business asset where ITC has been taken. R. Related party or distinct persons transactions. I. Importation of service from related person in the course or furtherance of business. P. Supply between principal and agent. Now, these 4 cases we will discuss in detail. Permanent transfer or disposal of business asset where ITC has been taken. For example, a supplier purchased a laptop. The cost of laptop is 50,000 rupees. The invoice value, the GST on that cost is 9,000 rupees. Total invoice value is 59,000 rupees. The supplier capitalized the invoice value of 59,000 rupees and each charge depreciation on the invoice value of 59,000 rupees year after year. At the end of the second year, the supplier transfer this laptop to a charitable institution for free of cost or without consideration, or for one or other reason he throw this laptop in a dustbin. In either case, it is not a supply, it is not a taxable event, and GST will not be attracted. The reason is, he not took the ITC, he capitalized the GST portion. Scenario 2. Suppose the supplier, instead of capitalizing the invoice value, capitalized the cost of this 50,000 only, and this GST portion he took ITC. He claimed depreciation on this cost of 50,000 rupees year after year. At the end of the second year, he transferred this laptop to a charitable institution for free of cost without consideration, or he throw in dustbin. In either case, it will be treated as deemed supply. It is a taxable event and GST will be attracted. The only reason is he took ITC on the GST paid on purchase of this laptop. Suppose he is having he purchased a motor vehicle. In that case, he could not take the GST, ITC, because it is a blocked credit. In this case, if he transfer this motor vehicle to a charitable institution for free of cost, it is not the deemed supply, it is not the taxable event, and GST will not be attracted. Reason is, in this case also, he has not taken the ITC. The second point is supply between related persons or distinct persons. A shoe manufacturer in Chennai, Tamil Nadu, having a sales depot in Bangalore, Karnataka. Both are registered under same PAN, so they are distinct person. The shoe manufacturers in Chennai do stock transfer to his sales depot in Bangalore, Karnataka for making further supply to his customer in Karnataka. In this case, the sales depot in Bangalore will not give any consideration to the Chennai head office. Even though there is no consideration in this case, it will be treated as supply. It is a taxable event and GST will be attracted. If employer give any gift to the employee to the extent of rupees 49,999 rupees, no GST will be attracted. If the gift value exceeds rupees 50,000 or more, GST will be attracted. Any perquisite given by employer to employee is not taxable, provided there is a contractual agreement between employer and the employee. Next point is supply between principal and agent. Principal supplies goods to agent. Agent, on behalf of the principal, sold that goods to third person and issue invoice to the customer in his own name. Treated as the supply between principal and agent is treated as deemed supply. It is a taxable event and GST will be attracted. Second scenario, agent procures some goods from third person on behalf of the principal and receive invoice in his own name. Subsequently, he transfers such goods, he supplies such goods to principal. These will be treated as deemed supply. It is a taxable event and GST will be attracted. Next point is importation of service from a related person in the course or furtherance of business. SBI in India obtains certain services from SBI USA. SBI India and SBI USA are related persons and he obtains services in the course or furtherance of business without consideration. It is a supply, it is a taxable event and GST will be attracted. In all these four cases, permanent transfer or disposal of business asset where ITC has been taken, supply between related parties or distinct persons, supply between principal and agent, importation of service from related persons in the course of furtherance of business. In all these four cases, out of three conditions, two conditions are satisfied. There is a supply of goods or services. The supply is in the course or furtherance of business. The only condition missing is it is without consideration. But in all these four cases, even though there is no consideration, it will be treated as deemed supply. It is a taxable event and GST will be attracted. If you want to summarize these four in simple point, T is where ITC has been taken. RIP, related party transactions, importation of service and principal agent transactions. This is related party transactions. So if you want to say in short, if ITC is not taken on purchase and supply is to unrelated party, and I use the word and, if both the conditions are satisfied, it is not a supply, it is not a taxable event, and GST will not be attracted. There is one point that free samples and gifts given as free of cost without consideration do not qualify as supply, but provided the ITC should not be taken on these free samples and gifts at the time of purchase. Our condition number 3 is supply should be in the course or furtherance of business. It should not be in personal nature. If it is in personal nature, it is not the taxable event and GST will not be attracted. But there is one exception to this condition, that is importation of service. If service is imported, even for personal nature, not in the course or furtherance of business, it will be treated as supply. It is a taxable event and GST will be attracted. In the beginning, I told you that if 3 conditions are cumulatively satisfied, it is a taxable supply and GST will be attracted. That is, there should be supply of goods or services or both. Number 2, the supply should be for consideration. Number 3, the supply should be in the course or furtherance of business. But in following these 10 cases, even though all the 3 conditions are satisfied, it will not be treated as supply, it is not a taxable event, and GST will not be attracted. What are the 10 circumstances? A, B, C, D, E, L, M, N, H, W, homework. A, actionable claims other than lottery, betting and gambling. Lottery, betting and gambling, these 3 items are supply, taxable event and GST will be attracted. Actionable claims other than these 3 items are not a supply, not a taxable item and GST will not be attracted. B stands for building, sale of building. Sale of building is not a taxable event and GST will not be attracted, provided entire consideration is paid after issuance of completion certificate or its first occupation, whichever is earlier. If even ₹1 consideration is paid before issuance of completion certificate or its first occupation, whichever is earlier, it is a supply, it is a taxable event and GST will be attracted. C, court and tribunal. Services provided by court and tribunal is not a taxable event. D, death expenses. Funeral, crematorium, transportation of deceased, all these death expenses are not a supply, are not a taxable event. E, employee-employer. Services provided by employee to the employer in the course or in relation to employment is not a taxable supply. L, land. Sale of land. M, member of parliament, MLA, member of panchayat, member of municipality, member of local authority, member of the constitution like prime minister, president, vice president. The services provided by all these members are not a taxable supply. N, non-taxable territory. Supply from one non-taxable territory to another non-taxable territory without goods entering into India. For example, a supplier in India procures some goods from vendor in US and requesting the vendor to make direct supply to his customer in Japan. In this case, supply made from one non-taxable territory to another non-taxable territory without goods are entering into India. It is not the supply, it is not the taxable event and GST will not be attracted. Next is H. H stands for IC sales. Supplier in India procures some goods from vendor in US. Goods started from USA but not yet reached Indian custom ports. It is in IC in ship. The supplier 1 in India supplied these goods to supplier 2 in India through endorsement of documents. In this case, it is not a taxable event and GST will not be attracted. W. Goods in customs warehouse. Supply from goods in custom warehouse. Supplier in India procure some goods from vendor in US. Goods reached our custom ports but not yet cleared. Still it is in customs warehouse only. The supplier 1 transfer these goods to supplier 2 in India before clearance from customs warehouse for home consumption. It is also not a taxable supply. GST will not be attracted. We covered all the key points in section 7 except schedule 2. Now we will see schedule 2. Schedule 2. Schedule 2 states activities or transaction to be treated as supply of goods or supply of services. Total, there are 6 paras in schedule 2. We can broadly categorize these 6 paras into balance sheet items and profit and loss account items. In balance sheet, in asset side, there are land, building, plant and machinery, inventory goods, other business assets, intangible assets and intellectual property rights. All these assets, if title is transferred to third person, it will be treated as goods. If all these assets only right to use is transferred, it will be treated as service. For example, lease, tenancy, license to occupy, easement, rental of immovable property, all this will be treated as service. If a person ceases to be a taxable person, he may surrender his registration or his registration may be cancelled by the department. In such cases, assets and goods forming part of his business where ITC has been taken shall be deemed to be a supply by him in the course or furtherance of business immediately before he ceases to be a taxable person. For example, I am running a business. I am having plant and machinery and all. I took ITC on that plant and machinery. Suddenly I am closing my business and surrendering my registration. In such case, I took ITC on plant and machinery. That plant and machinery will be treated as supply and I want to pay GST on that plant and machinery which I took ITC. But there is one exception to this condition. That is, if I transferred all these assets as a going concern or to a representative, it will not be treated as a supply. It is not a taxable event and GST will not be attracted. When come to profit and loss account side, in income and revenue side, if the supplier is making absolute goods, no issue. If the supplier is making supply of absolute services, no issue. Where the supplier makes the mix-up of both goods and services, there the schedule 2 advise that, for example, in case of job work, treatment or process applied to another person's goods, restaurant services, building constructions, works contract, IT software upgradation, implementation, development, design, adoption, customization and enhancement. In all above cases, even the material value is 99% and service value is only 1%. Still, it will be treated as supply of service only. An agreement to refrain from an act, an agreement to tolerate an act, an agreement to do an act will be treated as supply of service only. With this, we completed section 7, scope of supply. Now we go to section 8, tax liability on composite and mixed supply. In case of composite supply, tax liability shall be calculated at the rate applicable to principal supply. For example, there is a composite supply of mobile and charger. Mobile is the principal supply. The GST rate applicable to mobile is 18%, which is the principal supply, and GST rate applicable to charger is 28%. But in this case, since it is a composite supply, though the GST rate of charger is 28%, since the GST rate of principal supply mobile is 18%, charger will also be taxed only at 18%. Suppose in place of charger, if any other goods is there which is exempted and GST rate is only 0%. In that case also, since it is supplied along with the mobile, since principal supply GST is 18%, these exempt supply will also be taxed at 18%. Next, mixed supply. The tax liability of mixed supply shall be calculated at the rate applicable to the supply that attracts highest rate of tax. For example, if there is a mixed supply of chocolate, biscuit and beverages and it is supplied at a single price of 1030 rupees. In this case, for chocolate, biscuit and beverage, chocolate is taxed at the highest rate of 28% and same will be applied for calculating the tax liability of mixed supply. Thanks for watching. Please like, subscribe and share with your CA, CMA friends. Thank you.